Hello, welcome back guys. In this video we are taking a look at eBay, a company that has also dropped quite a lot, significantly with the rest of the market, almost 50%. And it's today down 2.5%, again with the rest of the market. I think the Nasdaq is down about 2.5 as well. Now you will see if you take a look at the 5-year chart that the company has been relatively steady for many years, and then it had a little bit of a boom and then going down again. Now, there will be some very interesting things to notice here, and I'm gonna show you how this tool can actually help you clarify exactly what is going on with a situation like eBay here. Because you see some of these metrics and you are like, okay, how can this have a price to earnings ratio of 2.3 or so? Is that wrong? No, it's not actually wrong, but there is a reason for this one. And the price to free cash flow ratio is 11, and we're going to examine exactly what is going on, why that happened. Now, if you take a look at the outstanding shares, this is a thing that I like a lot, actually. The company has been buying back shares, buying back a ton of shares, really. About 45% of its outstanding shares back in 2017 have already been bought. And this is absolutely insane because if you were an investor back then, your shares are worth much more nowadays, that is. Now, the company does have some extra total liabilities compared to the free cash flow that we're going to examine. It will take about 7.6 years of its last year's free cash flow to pay back all their total liabilities. That may be a little bit too much. Now, an interesting thing that I really don't like to see here, the company is not really growing their revenues in the past 5 years. It's a little bit stagnant, and it's something that I don't like to see, really. I want the companies to be growing their revenues at least a little bit more than what eBay has been doing. Now, you will notice some insane net income growth, but this is a little bit of a lie here. There's a reason for this one. It's true data, but there's a reason for this one, which we're going to examine again. And the 5-year free cash flow growth, minus 10% here, it's been going down. Total equity growth somehow has been going up, even though the company has been buying a ton of shares, which is interesting as well. Now, the company doesn't seem to be having a lot of debt compared to its equity, but we kind of want to examine it in terms of the free cash flow. We will a little bit later. And there are some very interesting things to notice here. Like, take a look at this net income margin here, for instance. 113.2% is absolutely insane, and you may be wondering why this steep increase. We're going to examine why. There is a reason for this one. But first, let's take a look at the dividend yield, which is 1.8%, and it's about the same level since a couple of years now. But the payout ratio is 20%. Payout ratio in terms of the net income is 4%, so it's very serviceable. And I do want to always examine the module here just to see whether it has been declining or increasing. Overall, it has been increasing pretty much every year, so I like to see that a lot. Okay, so another thing that I kind of want to check with this tool here is I want to see what we are looking at in terms of the company's insider sales. Let's see what we are having here. Are people actually selling a lot? Are they buying a lot? Let's examine it a little bit. Now, this tool here is super convenient because you can kind of see exactly what happened here, and you can even click on the download link and it will actually take you to the actual form where you can examine it in more detail here. This is it, the whole thing. But if we go back, you will see here that a lot of these are M-exempt here. That's the code, and that's what it means. And exempt means that they exercised or converted derivative security received from the company, sort of like an option here. And so this is not exactly what we're looking for. We mainly want to see the sales and purchases. So, for example, that would be a purchase here, which we are not seeing. So there are not any real buys over here. But what about any sales? Now, all these are sell actions here, but the thing is, you will see that these are like M-exempt here, as I mentioned, so they didn't really spend money here. You want to be seeing things like a buy or an explicit sell, and that would mean that actually people sold or bought actually shares that they were holding, or they actually bought them with their own money. So F in kind here, for example, you will see that it's a payment of exercise price or tax liability using portion of securities received from the company. So this is not exactly what we're looking for. It doesn't seem like we have some very important information here. These are awards, for example, like restricted stock units. We are not really seeing any selling on buying per se. And so this doesn't seem to be yielding any significant warning here, any significant alert or any other helpful information about a buy. Seems like it's normal, usual, basically sales and purchases from insiders. Okay, what else can we examine using our tool here? we can always take a look at the trends, and you will see that the company is not mentioned too much on stock tweets. It's not really trending, and that can actually be a good thing. It's under the radar. That can be a good thing if it's actually a good company, of course, which we are going to examine in more detail as we already started to do that. But it doesn't seem like it's too trendy. It's a little bit better on Twitter, but Twitter is not like your daily discussion a platform that stock tweets is. And I prefer to be taking a look at this one in terms of what is happening for impression, sentiment, and all that. But in terms of impressions, it seems to be going down a little bit. Okay, that's interesting to note as well. The other interesting thing that I'm kind of curious about is what our analysts think about it. So we're taking a look at the price targets. Now, overall, you will see that the price targets are sitting next to 50 and 60 bucks. You will see for most of these, even if we go back 69, maybe 71. So they are not too far from the current stock price. If we go back over here, you will see that we are sitting at 43. They tend to be near 50, so a little bit of an implied increase is what they are thinking about this company. Now, let's examine in more detail and discover what's happening with the margins here and the net income. Why this insane increase? Now, for this, we're going to take a look at our income statements here, and you will see that the revenue of the company has been the same, pretty much 9.5, 10.4, a little bit of an increase, but slight increase here. And the gross profit has been similar as well, 7.3 to 7.7, not much of an increase. But if you go down, you will notice that the net income has been increasing precipitously again. In 2021 fiscal year, that was 13.61. So the previous year was 5.6. So something happened here. Something happened in between that increased this net income, and it doesn't seem to be coming from operations, of course. We already saw that the gross profit was 7.7, so they probably sold something. This is what this means, and this is why they got this extra net income and this reduction in their PE, because they got some net income coming from a sale and not really from their operations. Now, we can discover exactly what happened, and the way to do that is go to our company analysis tab here, our SEC filings, and what I did is I opened up the 10K for the company. The 10K is actually the form that they file for the fiscal year, pretty much, and I have it over here. I have opened it up. This is the one. And you will see here that they have discontinued some operations by selling stuff. So you'll see November 14, they have completed the previously announced sale of 80% of the outstanding equity interests of eBay Korea for like 3 billion here, and also some other stuff. So they have completed the previously announced transfer over here, announced sale of StubHub business. So this is how they got their extra over here, and this is pretty much the breakdown of what happened here in terms of this net income that they received. So now you know what happened here, and now you know that the actual net income that the company generated, if you exclude this, sort of like cumulative net income that's coming from non-operations, and that's sort of like named as a comprehensive income, you can call it like this. It's coming not from operations of the company. But what we can see, if we actually account for that, even if we go back to our income statement, you will see that this is about similar to what they did last year. So it would be about maybe 6 billion over here, maybe a little bit less even. So the next thing that we want to see is what they are doing with their balance sheet. Are they increasing their balance sheet? Now, this is interesting because, remember, they have been buying back a lot of common stock. They have been buying back shares tremendously, actually. Yet they are decreasing their long-term debt, and also their total debt here gets decreased. The total assets also increasing, which is very interesting. The total liabilities that they have is almost 17 billion, which is doesn't seem like it is a lot. Total equity is about 10 billion here, again increasing. So 17 billion in terms of total liabilities here. Let's take a look at the cash flow statement, and last year they did 2.2. So it's what we talked about earlier. It's about 7 years of this year's free cash flow here, and the average is like 2.2 what they are doing. So it's about 7 years regardless of the year, basically. And it is a little bit more than I would want, but it's not too worrisome, frankly. They can still quite easily should be able to actually repay the debt that they have, and that's not just debt. It is the total liabilities that the company has. That could be anything, suppliers included, for example. So it's not terrible at all. And if we take a look at what they have been doing in terms of their operating activities, again, it's about the same story. It's actually less than 2017, though, which is a little bit concerning here, if not quite concerning. But you will see that there are other non-cash items that were excluded here. So this is some expenses that they had. So capital expenditures, normal, usual stuff. Their investing activities are in the positive over here for many years now, and this basically implies that they are selling more than they are purchasing in terms of investments. And it's interesting to note, and it means that the company seems to be selling a little bit more than I would like, and not really acquiring too many investments. So maybe they require a little bit of extra cash flow. Now, they are paying some dividends, of course. That's not worrisome. I mean, we examined their payout ratios are totally fine, and their financing activities are in the negative, so they are paying back debt. That's good, and they are also repurchasing common stock for the most part. This is what they're doing, heavily repurchasing common stock, which as a shareholder you love to see. Now, all of this concerned, I want to examine whether I would want to buy this company. Now, we know that there's stagnation in terms of the revenue, like the company doesn't really grow. 0, 1, and 2 is what I'm going to use. What about the net income here? Now, the margins are, again, a little bit all over the place. Remember, this last year we cannot take into account because there was this extra sale. So we're going to go with the previous years. And the net income margin, again, over here is a little bit too, probably a little bit of the odd one out. I want to say that we're looking similar, we're looking about this at this range, like 16, 23 maybe. So I think I'm going to go maybe 18, 20, and 22 here. And the free cash flow margin is going to be again taken from probably these years over here, and I'm gonna go 80, let's go 90 and 100, and an annual return of 13% is what I typically want to make. Now remember, this 80% of free cash flow margin is basically 80% of 18 is what this means. So it would be like what, maybe 16%, something of that sort, 16-15% in terms of the revenue. So if we take a look at this and hit calculate, let's see what we're getting here. Now, as I would expect, this is not expensive. It seems like we are there in terms of our medium, although we are close to the current price, yet this is about 1% revenue growth here and 20% net income margin, which may actually be low, depending on what the company will be achieving in the next few years. We can kind of go back a little bit and also take a little bit of a look at what has been the overall over here in terms of the net income growth. Yeah, you will see that I'd say, yeah, the net income has been growing over here, but what about the margins? Like the margins, yeah, they have been selling some stuff, and this is why this has been increasing. I think we're in this range. Yeah, this would make much more sense here. This is probably because of sales that they have been doing for the company, and not really from their operations for the most part. But we can always try all sorts of different scenarios in terms of margins, but a 30-40% margin wouldn't make a ton of sense here for the next 5 years. And so at these current prices that we examined, I think that eBay may be close to being a buy, but it is a curious buy. It is a little bit of a dangerous buy just because it doesn't seem to be growing that much. So I personally would probably avoid it. It seems to be a little bit stagnating in terms of revenue, even though it seems relatively cheap, although remember that we had this extra sales here. It's probably not what I would want to spend my money on right now. It was interesting examining though, because it's close, and if it goes down a little bit more, maybe it becomes a little bit of a better value, but I think there's better things to buy right now in the markets. Thanks a lot for watching this one. Remember to leave a like and subscribe if you enjoyed, and let me know what you think about eBay with a comment below this video. Thanks again. I'll see you soon. Bye bye.